the ECB preview. The European Central Bank, led by Mario Draghi, convenes tomorrow, September 8th, to decide on the rates. No changes expected in rates, although I've seen Citibank, I think they expect the ECB to cut the main lending rate from 0 to minus 0.10. Remember, what's negative is the deposit rate, okay? Deposit rate minus 40, and that serves as the limit for the ECB's bond buying. So the European Central Bank can buy bonds that yield up to minus 0.40. So if investors are paying the German government to hold their money, it doesn't mean that the ECB cannot buy these kind of bonds, okay? These could still be cheap. Anyway, that's what's expected. And there might be questions about whether the ECB has reached its limits on that. Okay, what else can we expect from the ECB? Well, inflation recently, as I mentioned before, is low, 0.2 headline, 0.8. And the core inflation, in this specific meeting in September, the ECB releases fresh forecasts. It unleashes these forecasts once every 3 months. It happens now. Let's see if inflation and growth targets are lower. There will be a question, what else can the ECB do? They're buying 80 billion euros worth of bonds and corporate bonds, ABS, asset-backed securities, you name it, every month. Lending money, paying banks actually to lend money, negative deposit rate, and it's never enough, okay? I don't think they'll cut rates further down because negative rates are hurting banks. Remember, banks rely on the margin between money deposited and money lent out to make money. And with very low and negative rates, it makes it problematic. We know there are banking troubles in Italy and also in Germany. Despite lending incentives, banks are idle. Well, they have some capital shortfalls and they don't know who to lend to, okay? So there's a lack of trust, lack of confidence in the economies. Fiscal stimulus is needed. The ECB doesn't say it outright. It always asks governments to do more in general and talks more about structural reform, which is sort of very vague and in general. We know that Germany has surpluses and it could certainly spend money. All in all, the ECB is a bit limited, okay? What can they do anyway? They can extend QE, their bond buying program, beyond March 2017. Remember, the original program was planned to end right now in September 2016. It was launched in early 2015. So they'll extend it perhaps by 6 months. And I think a more powerful move, something that will hurt the euro even more, is to extend it to infinity, like QE3 in the United States, to tell markets, we're going to buy bonds at 80 billion per month until we change our mind. But probably they'll have only a 6-month or maybe 12-month extension. They might change the rules regarding buying bonds. Currently, they cannot buy too many bonds that belong to one country or one specific issuance, have various conditions in order for them not to be not to dominate the market like the Bank of Japan does in Japan. And they might soften these rules, they might loosen conditions, also in buying corporate bonds, and perhaps introduce more small steps. They can do only small steps because they're close to their limits. That's why expectations are relatively low. But if they do surprise with a big rate cut, if they do surprise with even more QE, then the euro will fall. Okay. All in all, the euro is starting from relatively high ground because of the strength, well, the weakness of the US dollar. So we can expect various moves around there. Okay, so that's the ECB preview. All in all, no big moves expected, I would say. If we do have any kind of fresh stimulus or hints about big actions in December, for example, then we can have the euro falling. Otherwise, it'll chop around or maybe even rise just a bit, okay?